Hello, investors, and welcome to our Stock Market for Beginners series. Today's episode is all about building your foundation. We will explain 12 terms you should know as investor. If you have ever been confused by terms like bonuses, dividends, or stock split, don't worry, we are going to simplify it. Let's dive right in. A private company is owned by individuals or small groups. It's not open for public investors. Think of it as a local businesses like family run clinic in Dubai or a group of friends running a trading company. They are not allowed to ask funds from the public. In UAE, in private company, there must be minimum of 3 shareholders. Up to 49% foreign ownership is allowed. Example, Mubadala Investment Company in UAE. A public company, on the other hand, has access to public money. They can choose to list on stock exchange, meaning they can sell their ownership in the form of shares to the public. Examples, Emaar, ADNOC Distribution, and Air Arabia in UAE, Tesla and Apple in the USA. What is an IPO? An initial public offering. IPO is how a private company becomes public. It's the first time shares are sold to outside investors on stock exchange. For example, when ADNOC Gas listed on ADX or Salik on DFM, that was their IPO, giving investors a chance to own a part of a company. These are the few big names that may bring IPOs by the end of 2025. Dubizzle, Etihad, Five Holdings, Masdar, Noon.com. But the dates are not yet confirmed. A stock or share is a piece of ownership in a company. If a company is like a pizza, stocks are slices of that pizza. When you buy one, you own a small part of the business. The more share you hold, the more ownership you have. And you will even receive invites for company meetings and provided you can offer valuable inputs. Let's see few listed companies ownership. ADNOC Distribution has 23% ownership with public. Similarly, Emirates NBD has 38.91 ownership with public. In USA, Apple has 99.9% public ownership and Coca-Cola has 99.23% ownership. The remaining ownership is held by promoter and other shareholders. Who is promoter? A promoter is typically the founder or the key person behind the company. They play a major role in starting and growing the company. Promoters often hold a large chunk of shares and can strongly influence decisions. Who is a shareholder? Once a company is public, anyone who buys shares becomes a shareholder. Shareholders can earn return in two ways: through capital gains when share price going up, or through dividends, part of profit shared as a cash. What is stock exchange? A stock exchange is where stocks are bought and sold. In the UAE, we have Abu Dhabi Security Exchange ADX and Dubai Financial Market DFM. Globally, famous one includes New York Stock Exchange and Nasdaq. These exchanges help ensure safe and transparent trading. What are assets? An asset is something valuable you own. In investing, assets grow your wealth. There are four major asset classes: stocks, equities, ownership in companies, bonds, fixed income, lending money to government or corporations, real estate, property investing, commodities like physical gold, oil. But nowadays, you should also consider crypto or NFT token as a fifth asset class, digital assets. Smart investors often mix these in a diversified portfolio to reduce risk. What is a portfolio? Your portfolio is a collection of assets you own. It may include stocks, bonds, real estate, gold, or crypto. A strong portfolio balances risk and reward based on your goals. Now comes the very important part of the video: how companies benefit shareholders. For that, we need to understand these. First, bonus shares. A bonus issue is when the company gives free extra share to existing shareholders. Let's say a company announces a 4:1 bonus. That means you get extra 4 shares for every 1 share you already own. If you have 100 shares, you now have 500. What happens to stock price? It adjusts accordingly. If the stock was 10 dirhams before the bonus, it might become 2 dirhams after. Impact on your investment value? No change. You own more shares, the total value remains the same. Impact on company shares? Total number of shares increases, but the company ownership stay equally divided. Stock split is similar to a bonus. It divides each share into smaller parts to make shares more affordable. Example, 2:1 stock split means every one share will split into two shares. If you had 50 share worth 100 dirhams after the split, you will have 100 share worth 50 each. And stock price, it drops in proportion to the split. Holding value stays the same. You now own more shares at lower price. Number of shares in the company, it increases, but the total market value doesn't change. A rights issue is when a company offers its current shareholders the right to buy more shares, usually at discount before offering them to the public, because it helps the company to raise capital. Example, you own 100 shares, the company gives you a right to buy 20 more shares at lower price. Stock price might temporarily fall due to more share being issued and the market adjusting for discounted price. Holding value, if you buy the rights, your ownership increases. If not, your percentage share in the company may decrease. Total share increase because the company is issuing new share to raise money. A dividend is a portion of the company's profit paid to shareholder, usually in cash. For example, if a company announces a 5% dividend and you own 1000 dirham worth of shares, you may get 50 dirham in cash as dividend. Stock price often falls slightly after dividend is paid. This is called going ex-dividend. Holding value, you will receive income, but your share price may adjust. Total shares, no change. Dividends do not affect the number of shares. Alright, let's summarize. Stock represent ownership in public companies. IPOs bring private companies to public. Your portfolio includes different type of assets, and corporate actions like bonuses, splits, rights issue and dividends impact your shares price and ownership differently. Understanding these basics puts you miles ahead of average new investors. If you found this video helpful, hit the like and subscribe button. We are here to make investing simple and safe. In the next episode, we will learn more technical terms related to stock market. See you next time, and as always, happy investing.